the chapter Dissolution of Partnership Form. First, in this video, we have to learn few new transactions which are affected to our account and how we have to solve the transaction that we have to discuss in this video. Before going to discussing about this video, first we have to read the question, what the information is given. First we have to read the question carefully. So here, the content they are given, Anil and Sunil were partners in a firm. Their balance sheet as on 31st March 2020 was as follows. Balance sheets given, liabilities amount, assets amount, under balance sheet, creditors, bills payable, bank overdraft, Mr. Sunil's loan, profit and loss account, capitals they are given, assets and cash, debtor, stock, furniture and machinery, buildings and goodwill they are given. In the next line, they are given further information also, that on the above date they decided to wind up the firm. The following information is available. So here one by one they are given. Debtors realized 10% less, stock realized 10% more than book value. Stock realized, actually the information is that stock realized 10% more than book value, Buildings realized rupees 62,000. Vehicles which was unrecorded also realized rupees 4,000 they are given. Next, furniture is taken over by Anil at a valuation of rupees 9,000. Creditors to be settled at 10% less and interest on BOD is due to rupees 500 also paid off. Mr. Sunil took over his wife loan. Dissolution expenses amounted to rupees 3,000. Prepare realization account, partners capital account and cash account. So these are the information which is available. With the help of this information, we have to prepare 3 ledger accounts of the concept of this question. We have to classify the question, what are the information they are given. Here, let's come to here. Anil and Sunil, 2 members are the partners in a firm. Their balance sheet as on 31st March 2020 was as follows. The first logic of this question is, in this question, they are not given about the profit sharing ratio. They didn't give information or they didn't mention any information related to profit sharing proportions. What they are given, directly they started with a new balance sheet. Here, therefore, we can imagine that 2 partners are there. Whatever the profit, whatever the loss they have earned, that they are going to be shared or distributed equally as per the partnership deed, as per the partnership act. Now, one by one they are given. First we have to read, and if there is any information which is related to the other account, just we have to classify. Creditors, they are given in the liabilities and creditors which come step 2. Bills payable, it is also come to step 2. Bank overdraft is a liability, it will also come to step 2. Mr. Sunil is a partner. Sunil's wife is not a partner, so it is also come to step 2. Profit and loss account, it will come to partners capital account. Capitals, it is come to partners capital account. So totally liability side we have 2 classification. So 1, 2, 3, 4 transactions will come to the step number 2 of realization account. Profit and loss account and the capitals will come to the partners capital account and the credit side we have to record it. In the asset side, cash will come to cash account only. realization account. Step 1, we have to discuss all these transactions, and the cash will be discussed about the cash account only. So in the asset side we have two classification. One, cash will come to the cash account, and the remaining all assets, realizable assets what we have, that will come to the realization account. Step number 1, first in the balance sheet. And next further information is given. On the above date, they decided to wind up the firm. So these two partners has decided to wind up the firm. The information is available. The following information is available. So what is the information they are given is debtors realized 10% less. So in previous videos and all, they are given directly value. But here they are given the value on the basis of percentages. So if while we are giving the values of the percentages, means we have to decide that what the value they are given, that will be considered as a 100% value in the balance sheet. What the value given in the balance sheet, we should consider as a 100%. Debtors may be stock, furniture, machinery, buildings and goodwill. Value they are given, we imagine these values will be considered as a 100% only. For this 100%, less means we should minus from the 100%. More means we should add it to this 100%. Are you got it? So less means minus from the 100%. Add means, so more means we should add it to that 100%. So buildings realized 10%. Less is nothing but it will decrease. Debtors value will be realized 10%. Less means, so we will be considered the value will be reduced as. So while writing to the step number 3, what is the percentage we considered? Means we should consider only 90% because 10% is reduced as. Stock realized 10% more than book value, 10% more than book value. Clearly 10% more than book value. Stock realized 10% more than book value. Buildings realized rupees value directly they are given, and vehicles, it is a new adjustment for you, which is unrecorded, which is not recorded in the balance sheet. See here, debtors is given, stock, furniture, machinery, buildings and goodwill is given, but they didn't given the information about the vehicles. What the value is given in the adjustment, what is going to tell? Vehicles which was unrecorded also realized rupees 4,000. What the vehicles value they have, that vehicles will be realized, that value will be realized, that the value is 4,000. Totally adjustment number 1. First we have wrote step number 3 and cash on. Step number 3 and cash on. We know that steps number 1 to 8 where we have to write in a realization account only. So step number 3 will come to realization account credit side, and the same value we have to write in the cash account of debit side of the cash account. Next, adjustment number 2 will say that furniture is taken over by Annie at a value of 9,000. So it will come step number 5 of realization account and partners capital account we have to write. So totally company will have how many assets? 1, 2, 3, 4, 5, 6 assets. But here what will happen? One asset is taken over. 1, 2, 3. 3 assets are realized plus 1. 4 assets will be taken over and realized will be given. Data, stock, buildings, they are given. So they are not given the information about one more asset, that is machinery value they are not given, goodwill value they are not given. Are you got it? So machinery value also they are not given, and the same time goodwill value is also not given. During that time, the tangible asset value is missing in the adjustment means we have to record it the same value in the step number 3 only. But the intangible asset, that is goodwill or prepaid expenses given in the balance sheet, but the information is not available into the adjustment means we have to ignore that two values. Goodwill is an asset, but we won't see, we won't touch, we won't just, we have to feel it. So it will be considered as a intangible assets. So remaining all the assets will be tangible assets. Stock, we can see, we can touch. Furniture, we can see, we can touch. Machinery, we can see, we can touch, we can feel. Buildings, we can see and we can touch. These are all the things we have to show in the documentary evidences. But goodwill, we won't see or we can't touch. Just we have to feel it. So for that sake, goodwill value, realized value is not given, means no need to consider the book value. Apart from the intangible asset, any tangible asset is missing for realization or realizable, sellable. During that time, the book value should be considered as a selling price. We have to imagine. So this is the logic in this question only. Totally new adjustments they are given. And creditors is be settled at 10% less, and interest on BOD due for rupees 500 also paid off they are given. The company will have how many liabilities? 1, 2, 3. 3 liabilities we have. Out of these 3 liabilities, they are given information about the creditors only. What they are given? Settled at 10% less. So, already I will explain that the book value will be considered as a balance sheet, that is 100%. For this, less means we should deduct, add means we should, more means we should add it to that 100%. Here what will happen? Creditors value will be discounted. They are given discount to us. After deduction of the discount, the remaining value we have to pay to the particular persons only. And also bills payable information is not given. We have to pay in full. Including that, one more thing they are given, interest on BOD is due to rupees 500 also paid up. So already we have taken a loan or we borrowed money from the bank is rupees 4,000. At the time of repayment, the banker will be expect something extra on our drawings, on withdrawing. So that extra will be considered as an interest. Whenever we have to repay the money to the bank, during that time, apart from this 4,000, we have to pay some extra money. That extra is how much? 500 they are given. That will be considered as an interest. So totally, adjustment number 3, we have to record a realization account, step number 4, and cash account. And cash account. Totally, adjustment number 4, we should be right like this only. Adjustment number 4 will say that Mr. Sunil took over his wife's loan. Here, the balance sheet of Mr. Sunil's loan. Sunil is a partner. Mr. That means his wife is not a partner. Therefore, Sunil took over his wife's loan. So, liability taken over. So, step number 6 of realization account, and it will come to partner's capital account. We have to record it. So there is no changes on the full amount the partner will be paid. He will be settled his wife, and later on he is receiving from the company. And also dissolution expenses amounted rupees 3,000. So this 3,000 we have to record it. Realization account, step number 7, and cash account. And cash account, realization account, step number 7, and cash account, we have to transfer that value. So by transferring, deducting all the expenses and the incomes, all the values, we have to prepare 3 ledger account. The 3 ledger accounts are realization account, partners capital account, and cash account we have to prepare. So next we have to move to draw the columns for realization account. So based on the following steps. So totally we have to follow 7 steps generally, but one step 8 or 9th step will be arised, that we have to see whether we have to get a profit means we have to follow 8th step, and if there is a loss means we should follow the step number 9 we have to go. So here, first we should draw the columns for realization account. So we should draw the columns for realization account. we will fulfill the conditions. Particulars. Amount. Again particulars. Amount. These are the columns for preparation of realization account. With the following steps. Step number 1, always we should record realizable assets at book value, and step number 2, always we should record the external liabilities which is available in the balance sheet, that already we have to classify here. So first we have to write step number 1, 2 realizable assets at book value. 2 realizable assets at book value. Already we have to classify and we have to write, we have to divide in the previous balance sheet only what the assets they are given. The entire assets we have recorded except cash at cash transaction. First point, debtors. 2 debtors. The value is 15,000. Stock 18,000. Two, furniture 12,000. 2, machinery 20,000. Buildings 50,000. Goodwill 10,000. So under step number 1, we should record all the assets, what the assets given in the balance sheet, that same assets we have to transfer here. Okay, let's move to the step number 2. Step number 2 always come to the credit side only. We will write by external liabilities. External liabilities at book value. What the value given in the balance sheet under liability side, then there we have to classify that liabilities we have to transfer here. So here the first point is creditors. Creditors. The value of creditors is 10,000. By bills payable 6,000. By bank overdraft 4,000. And also by Mr. Sunil's loan. Mr. Sunil's loan 5,000. These are all step number 1 and step number 2 which we have to follow while preparing the realization account of particular partners. We have to move to the step number 3 of realization account. Step number 3, what it will say is always step number 3 will say about the assets realized. That means any asset we are saying is we have to write that one. So step number 3 always come to credit side of this account. So we will write the heading by cash account. In bracket we should write assets realized. Assets realized. Where the realized information is given, realized information is always given into the adjustments only. So here they are given debtors realized 10% less underline this. We should write under this only by debtors. The value of debtors is available in the balance sheet, that is 15,000 rupees they are given. So in bracket we have to mention 15,000 rupees is the book value, that is 100% which is given in the balance sheet, into 10% less they are given. Out of this 100% minus 10%, what is the present value? The present value is 90%. Therefore, the value of debtors is 13,500, which we have to get by selling the debtors. Have you got it? So be careful. So percentage is given with book value. We should consider as a 100% of value. So in this 100%, less means you should deduct from this. More means you should add to this value. We will get the changing value they are given. And also the same adjustment will be continued. Stock realized 10% more than book value. So more means we should add it to the 100%. So by stock, the value of stock is 18,000 they are given, into book value is 100 plus 10, we will get 110% is the value of stock. So therefore we have to get 19,800 rupees. We have to get the value of stock which is realizable at the time of this. Next, after that, same thing they are given by buildings. Buildings directly they are given 62,000. Apart from that, they are given vehicles which was unrecorded, which is not recorded in the balance sheet, also realized, that also we have sold. We will get the value of rupees 4,000 by vehicles. Vehicles 4,000. So this is the information given in the adjustment number 1. In the adjustment number 2, what they are given? Furniture. Related furniture is also an asset that is taken over. Before making the total, just once we have to check it. Company will have how many assets? 1, 2, 3, 4, 5, 6 assets company will have. Out of that, 3 assets we wrote here. Debtors, stock, buildings. And 4th asset, that is furniture, is taken over. But 1 asset is missing that we are not recording, that is machinery. We will write here by machinery. If they forgot to write in the balance sheet or the adjustment, this we should consider as a book value only, selling price or sales value. Only tangible assets we should write like this. If goodwill is given in the balance sheet but the information is not available in the adjustment, means we won't consider that value. Why we won't consider this? Goodwill is an intangible asset, though we won't consider the value of goodwill. So we will make the total of this. We will get one value. So by totaling of this, we will get 1 lakh 1,19,300. 1,19,300. 1,19,300 we have to get. This is about step number 3. Let's come to step number 4. Step number 4, always it is available into the debit side of realization account. We will write to cash account. In bracket we mention that liabilities paid. So before the payment, just we have to think how many liabilities we have. 1, 2, 3, 4 liabilities we have. Out of 4 liability, 1 liability is taken over, remaining 3 liabilities is not taken over, that we have to pay compulsorily. So here first point they are given to creditors. To creditors. So for this there is adjustment. Creditors to be settled at 10% less. Less is nothing but minus from 100%. The actual value of creditors is 10,000 into 90%. How this 90% we get? 10,000 into 90% is we will get 9,000. And they didn't give the information about the second liability, that is bills payable, that we have to pay compulsorily to bills payable. So the value is 6,000. And the third liability is bank overdraft, value is 4,000. For this there is an adjustment. So interest on bank overdraft is due to rupees 500, that also paid off. So to interest on BOD, bank overdraft, is 500. So 9 plus 6, 15,000, 15,000 plus 4,000, 19,500 rupees is the payment of liabilities that we have to pay at the time of settlement of cash account. In this cash account we have to show this one. This is about step number 3. So step number 1, always assets realized. Step number 2, always external liabilities at book value. Step number 3, realizable asset, that is selling assets. And step number 4, settlement of liabilities that we have to pay compulsorily at the time of winding up of the company. Let's come to the remaining 2 steps. Step number 5 and 6, assets taken over and liabilities taken over will come under step number 5 and step number 6. Under step number 5, always it is come to the credit side. We will write by partners capital account. We will write by partners capital account. So in under this, if any asset taken over by the partners, we should write under step number 5. If any liability taken over, this it will come debit side under step number 6. So here furniture is taken over by Anil at a valuation of rupees 9,000. They are given directly, value is given. Furniture is a asset, so asset taken over by the partner means we should write directly, so that partners capital account only. So here we will write by Anil capital account. This value will transfer to Anil capital account. What is this value? Furniture taken over. Therefore the value is given in the adjustment number 2. That value will transfer to the amount column, that is 9,000. So apart from that, no other assets are there. So just we have to count it. 1, 2, 3, 4, 5. Out of 6 assets, 5 assets will be there. 1 intangible asset will not realizable. So we have to ignore that one. Remaining all assets are transferred. And also payment of liabilities. So the detail also is given under step number 6. We will write 2 partners capital account. In bracket, what is that means? Wife loan. So we have to underline this one. Partners capital account. Who is taken on this wife loan? Sunil capital account. Sunil capital account. In bracket mention that wife loan. So wife loan taken over. Wife loan is taken over by Sunil. So what is the value of loan? 5,000. That 5,000 the lump sum value will transferred here without any changes and all. We have to pay lump sum value. Next, step number 6 is completed. Step number 7 always deals about the dissolution expenses or realization expenses, which we have to write under step number 7. Only step number 7 always come to credit side, debit side only to cash account. Under that we have to mention dissolution expenses. The value is given. Dissolution expenses amounted to rupees 3,000. They are given. So all the 7 steps we followed, and find out the 8th or 9th step will be arises in this question. Before going to that step, just we have to imagine which side we have a highest value, whether it may be the highest value of debit side or credit side. So in this question, we will get the highest value on credit side only. The value, total value is 1,53,300. The same value we will write here also 1,53,300. Out of this 1,53,300, deduct all the values, we will get the difference. The difference is 800 rupees. We have to get. We will give the name for this 800. We will give to partners capital account. In bracket we have to mention profit. What we have to get? Profit we have to get. What we have to learn about this profit? This profit we have to distribute it between the partners, that is Anil and Sunil, between Anil and Sunil. Therefore 800 into 1 by 2. There is no ratio given, so we have to distribute it equally. 400 for one partner, again 800 into 1 divided by 2. We will get 400 for second partner. So totally we have to complete the process of realization account like this manner only. So totally friends, my dear students, we have to completed the process of account number 1. Let's we have to move to the process of account number 2, that is preparation of partners capital account only. Let's we have to move to preparation of the partners capital account by drawing the columns only. So everyone must and should draw the columns on your classwork and are related to the partners capital account. The details is also available in our balance sheet only. So entire transaction details they are given. So based on that we have to move to preparation of the partners capital account. So first we have to draw the columns for partners capital account. Debit and credit. These are the columns for preparation of partners capital account. So particulars debit and credit, particulars debit and credit we have to write. So here two partners name we have to mention, Anil and Sunil. Their capital details also we have. So based on that we have to transfer the entire transaction. First we have to transfer the opening balances of partners capital account. We will transfer by balance brought down. By balance brought down. So here the capital balances which is available in our balance sheet, that is first partner will get 52,000, second partner will get 45,000. This is the opening balances which we have to transfer from the balance sheet. Next, apart from that, in the previous balance sheet, one more transaction that is related to the partner's capital account only. Which is the transaction? They are given profit and loss account under liability side. So this profit and loss account, sometimes it is available in the liability side, sometimes it is available in the asset side. Wherever they are given, we have to transfer to the opposite directions of the another account. Therefore, we have to transfer by P and L account. So the value of profit and loss account is 8,000 rupees. That should be distributed between the partners in the ratio of 1:1. Equally we have to distribute it. Therefore, first partner will get 4,000 and the second partner is also get 4,000 rupees. Apart from this, no other transactions they are given. There is no investment fluctuation fund, there is no reserve fund, there is no general reserve. So the remaining things as usual procedure we have to follow. So let's come to the first account. In this account, somewhere we have to record it. So partner's capital account, that will be transferred to the opposite direction of the next account. Step number 1, we didn't use the term partner's capital account. Step number 2, we didn't use the term partner's capital account. Step number 3, we didn't use the term partner's capital account. Step number 4, we didn't use the term partner's capital account. Step number 5, and this is we use the term partner's capital account. Step number 5, which side is there? Credit side we have to note, that will be transferred to the debit side of the next account. So in which account we will get this value? Realization account. What is that value? By Anil's capital account. For whom we have to transfer? For by Anil's we have to transfer. Why we have to transfer? Because its furniture is taken over. So their credited value will be transferred to the debit side. We will write to realization account. From where this value we have to get means we will get this value from realization account. In bracket you have to mention clearly furniture taken over. Who is taken over the furniture? Anil. So for Anil account we have to debited rupees for 9,000 that we have to deducted when we are going to settle there his account. Next, same the realization account debit side also we have to use the term under step number 6 to partners capital account. Here we have to mention that Sunil capital account. What is this value? Wife loan taken over. So Sunil's wife loan what she will taken. So given to the company that will be taken over. What is the value? 5,000. Which side we have to write? Debit side. So in the next account where it will come? Credit side we have to write by realization account. By realization account. In bracket we have to mention that wife loan. So who is going to take it? Sunil is taken over. So we will transfer to Sunil's account only. Next, come to step number 6 completed. Step number 7 we use the term cash. We don't write. Step number 8 we will write the term to partners capital account. In bracket we mention profit. That profit we have to distribute it here. We get the difference from the debit side. So we transfer the credit side of the next account. We have to write here by again realization account. In bracket we have to mention profit. The profit is 400 for first partner and 400 for second partner. Apart from this, we won't have any other values that which we have to transfer. So now we have to close the account. 52 plus 4, 56, 56 plus 400, 56,400. So here also 56,400 we have to write. 56,400 minus 9,000 we will get 47,400. 47,400. So we will write the start mark and we will give the heading to cash account. In bracket we have to mention capitals. So balance figure. This amount we have to pay when we have to close the company. Let's come to the total of second partner. 45, 49, 54, 54 plus 400, 54,400 we have to get. The same values we have to transfer here also. 54,400, the difference is also 54,400. closing of the company. Winding up of the company, we have to pay this value. That is for first partner this one and second partner is also this one. The third account is cash account we have to prepare. So let's come to preparation of cash account. We will draw the columns for cash account. So we will draw the columns for cash account. We should write debit and credit compulsory, particulars, amount, particulars, amount, particulars amount, particulars amount. So this is the format of cash account. So in the cash account, the first step always we have to transfer opening balances. We will transfer opening balance to balance drawdown. So where the balance is available in the previous balance sheet, asset side they are given the value that is 5,000 rupees they are given. That value we transferred here from the balance sheet only. We have to transfer this value. In the old balance sheet, any other outsider's loan is there? Just we have to check it. Here the loan is given. Mr.'s wife Sunil's loan they are given. Mr.'s is nothing but wife loan that will be taken over or that will be paid by Sunil only. So therefore it will add to the Sunil account, no need to write in the cash account. Apart from that, come to the realization account. In this account, somewhere we have to use the term cash. That value will be transferred here. So step number 1 we didn't use the term cash. Step number 2 also we didn't use the term cash. Step number 3 we use the term cash. So buy side is there, that will transfer to the debit side to realization account. To realization account. In bracket we have to mention clearly assets realized. The value of assets realized 1,19,300 rupees. That value we have to transfer debit side of the cash account. This is about the value from where we have to get this value under step number 3 of realization account. Let's come to the step number 4. Again we have to use the term to cash account. What is that means? Liabilities paid. How much means already we classified here 19,500. The difference we have to put in the debit side. So that value we transfer to the credit side. We will write by realization account. In bracket mention the liabilities paid, that is 19,500 we have to transfer. Let's come to the step number 5. We won't use the term cash account. Step number 6, here also we won't use the term cash account. Step number 7, we use the term cash account. What is that? Is dissolution expenses. In where we are going to get this value? Debit side of realization account. It will come to the credit side of the cash account. We will write by realization account. In bracket dissolution expenses. Dissolution expenses. The value is 3,000 rupees. Apart from this, any other values we have to write here? Nothing will be there. So if first accounting process is completed. Let's come to the second account. Second account is which one? Partners capital account. In this partners capital account, somewhere we have to use the term cash account. Which side? Credit side or debit side? Debit side. What is that values? Capital. Where we have to get value difference? The value we have to get from the Anil capital account and Sunil capital account. The same value we carry forward to the cash account. We will write by partners capital account. Under this first partner Anil, second partner Sunil. The value of Anil is 47,400. The value of Sunil is 54,400. Therefore, so totally 1,19,300 plus 5,000, 1,24,300. 1,24,300. Same value we have to note 1,24,300 rupees we have to get. 1,24,300 we have to get. So after transferring the values both the sides, we have to close the columns of cash account. Just we have to close the columns of cash account. Okay, my dear students, I think you people have been understood very clearly in this question also. So few different adjustment likes we have to discuss in the next video. Thank you everyone.